Hey folks, this is the Contrarian Trader, and let's take a look at the best stock picks. But before we do that, before we take a look at the charts, let's take a look at the economic data that was released today, Monday the 15th. And we had retail sales. Retail sales, huge economic number, one of the biggest. Market expectation of 0.7% increase. We came in, actually briefing was even higher at 0.9%. Actual came in at 0.4%, a big miss. When you X out autos, retail sales came in at a flat number versus expectations of 0.4% increase. Briefing.com was pretty high on both of these numbers, so we'll just exclude those. But the overall market expectation was 0.7 and 0.4. Actual was 0.4 and 0. Not good at all. Empire Manufacturing Survey saved the day. This is the New York State Empire Manufacturing Survey. Market expectation of 3.6 came in with a huge beat. So we'll see whether or not that will continue into August. The thing is with this market is that 1 month the numbers are good, the next month it's bad. It's never consistent. Let's take a look at, before we leave this page, I want to bring to everybody's attention this report here tomorrow. Watch out for the CPI. This is the Consumer Price Index. I've been discussing this with my members for several weeks now, and this is going to play into the housing so-called recovery. And several weeks ago, we had average hourly earnings come in with a big beat. So it was good. A U.S. worker is making more money on an average hourly basis, that's a good thing. As an American, I want to see that. But there's a flip side to that. It's inflationary. So when you add that into last week's PPI number, the producer price number, this is last week's PPI, came in with a market expectation of 0.3, actual 0.8%, a huge beat on PPI. That's a producer level. So tomorrow, being the 16th, we're going to see the CPI. Is inflation at the producer level being passed through to the consumer? Now, this is going to become a concern due to the fact that you have energy prices, which are now spiking. Oil prices are breaking out on a monthly basis, a huge breakout. So keep that in mind tomorrow. And the markets may ignore it because right now we're in silly season, and they'll tend to ignore economic data until after, of course, earnings are released, and then we come back to reality, which is how's the economy doing. And let's take a look at the chart of the S&P 500. All right, daily chart, S&P 500, nice looking chart, really good uptrend. We haven't broken out quite yet. We're just shy of a breakout. The one thing that should concern all of us, this rally higher is being done on declining up volume. That's not necessarily what you want to see when you're nearing a breakout point. This rally, this threat to take out 1687, what you really want to see is higher rising volume. Now, if we flag out on declining down volume and say let's base out at 1660, 1670, and then break out higher on rising volume, well, then that's a healthy market. It's a good chart. But right now, warning flag is on the track with this declining downtrend. The housing sector, I mentioned this before, and I mentioned this to my members 2 weeks ago. Be careful of it. This rally here was the Ben Bernanke rally. This is when the FOMC minutes were released last week. They didn't spike the market enough for him to be happy, so that evening he came out and he was very dovish on rates, thus destroying the U.S. dollar, bidding up bonds and knocking down interest rates. And interest rates can be inflationary as well. You can't qualify for a mortgage if you have rates that are skyrocketing. You have less and less borrowers out there that qualify. So what he did was single-handedly spiked the housing market by dropping back interest rates, dropping back the dollar, and we don't see a follow-through. He had a doji formation on Friday and a breakdown today, Monday, of 1.65%. Now, no big deals, assuming that we consolidate against this breakout point, the prior downtrend channel, the upper band. If we consolidate, hold this acts now as resistance, and we break out above 188.39, well then, okay, you can start buying the housing sector again, the home builders. The caveat is this, is that in the sell-off in June, we came just a hair away from a 20% correction in the housing sector. If we break back down into this downtrend channel, this is going to be a breakout point failure, very, very bearish, and will probably threaten to take out this double bottom formation here at the 172 level and probably take out 168. If we do that, we're in a new bear market on the housing sector. What does that say for the $85 billion worth of bonds that Bernanke's been buying up month after month, year after year? Doesn't say much. It's not a very, very good harbinger for the economy. Last macro chart. I always like to do a macro check of the overall indexes, the major indexes, before I take a look at the stocks I'm looking to trade. And this chart here is of the Russell 2000, or the IWM ETF, the iShares. And you could see that we had a beautiful, beautiful breakout in early July. The caveat being, and the IWM, the Russell 2000, is vastly outperforming now the S&P 500, but there's no volume. So it should be a concern, and we are now, I have another chart to share with members. If you draw a trend line up, we've pierced the upper band of the rising uptrend channel. So I'm looking to add to the TZA very, very shortly. But we need to show patience during silly season, earnings season, because what these companies have been doing is lowballing estimates, bringing down their estimates so they can beat by a penny, and CNBC could say, wow, what a great earnings season we're having. 55, 60, 70% of the companies are beating expectations, which were dropped down only a couple of weeks ago. It's a complete joke, but CNBC's viewerships are dropping off a cliff. So even in a bull market, which doesn't bode well for them, so they need to pump this market desperately. Let's move on to the best stock list. Okay, most of these are the stocks I covered in the best stocks picks that I sent out yesterday, but I do have a couple of extras that I added. SILC, Silicon Limited. This is a potential short, but not yet. Look at how it's consolidating here. My expectation is that we're going to continue higher. If anything right now is a short-term trade, SILC is going to be a buy. Watch out for volume, which is dropping off a cliff. Next stock is NTSC. By the way, I went over most of these stocks with my members in the week ahead commentary. We went over the weekly charts, looking for resistance levels where we can get short at a favorable risk to reward entry point. NTSC, National Technical Systems. We also took a look at the short interest, which is critical, especially when you're looking to short, because you want to know how many idiots are out there shorting stocks that could squeeze you out of your own position. NTSC, it's basing here. We thought it was going to go down earlier today. It recovered. I warned my members yesterday, watch out for 17. Sure enough, they bid it back up. They closed it above 17. Whenever you see the RSI, you listen to Technical Analysis for Dummies, you read that book, it tells you the shortest stock over 70. It's a joke. You'd be broke right now. Watch how it's consolidating here. It had an RSI of above 90, but it's trading sideways, thus alleviating the extreme overbought condition. So we want to show patience. I think we're going to break out here. I wouldn't short it just yet. If it collapses tomorrow, okay, I'm not willing to take the risk of shorting the stock right now. Down volume did increase today, and our MACD histogram is pulling back some, but it's just not, the price action is just not there for me. Whenever I see a bottoming tail, bidding us back up above support for a third consecutive day, I can't get too excited about the stock. I'm worried about the shorts getting squeezed, and I don't want to be one of them. Next stock is INSY. This is another one consolidating at $17 per share. Not much history on the stock. It only went public a few months ago. RSI above 90. Another one consolidated 17. You know what? I don't want to touch it. I'm worried about the shorts squeezing us out of our position. I'd rather see it spike higher, watch the shorts get squeezed, and then we begin to build a position, but not just yet. If it collapses tomorrow, so be it. It got away from us. Live to play another day. ALJ, Alon USA Energy. This is one that was looking at some resistance here at 1350. I'm concerned about the 50-day moving average crossing back down below the 200-day moving average. If you would have bought this as a long when I profiled it to my members last week, you would have been up substantially. But right now, if you're long of the stock, I would say warning flag is on the track. Let this 50-day moving average cross below the 200-day moving average. Let it pull back. hopefully to around $13 per share on declining down volume. Open up your long position. Then you look to get long of the stock. If I decide to make the trade, I will be sending out alerts of all of these to my members. HBOS, Heritage Financial Group, an insane mover. This stock was up 3% today alone. It's a bank, but they're making a lot of money. They're doing very well, these small banks. And they don't report earnings this week. It's the large money center banks that report earnings this week. These small banks report earnings next week. So I would wait until later in the week, if at all possible, to get short of these stocks. You're seeing a little bit of topping action, $17 per share. I have a weekly, it's either weekly or monthly chart I share with members. We know where resistance is on this stock. There is historical resistance. We're waiting for it to get up to that level. You need to let the stock come to you before we open up a short position. More than likely, we're going to be involved with HBOS sooner rather than later. Next stock, HDKN, another bank stock. I mentioned to my members yesterday, this is one that you do not want to short. Good consolidation of $15 per share. You can argue it was a 4-day consolidation. And I mentioned, if anything, you want to buy it on Monday morning. It opened up strong, up 1% today. And I think we're probably going to head higher. I would not short the stock just yet, even though the up volume is declining. Not just yet. Earnings are coming out. It's silly season. They're going to want to spike these stocks higher, and then you want to short into an extreme overbought situation. I would do that into earnings. AETI, American Electric Technologies, extreme overbought stock. RSI, 92.81, very attractive to me. Looking to add to positions on this one. Note the up volume. Friday's up volume was anemic, but today we had some good price action. ADX line is at 58.41, nearing a very, very overbought levels, but we're probably going to see a couple of extra days of higher moves on this stock. This is a new one I'm adding, Demandware, daily chart. RSI of 85.04. Note the declining up volume. This is one that we're probably going to be short of in fairly short order. We have an ADX line of 66.88. Very, very overbought. Got to be wary of the Stoke RSI, double bottom formation at the neutral level. It's a fairly bullish setup. Ultimate oscillator rolling over. All right, so this is one that is very interesting to us. We might get another pop higher. I'm going to check out what the short interest is with my members in tonight's Contrarian Commentary, and I will get that out to them, and we'll decide where we want to get short, where and when. This is one that fellow member Shane had asked me to take a look at. This is the GDX monthly chart with inflation. I'm fearing that it's coming, especially with energy prices now starting to break out, oil prices breaking out. Take a look at your GDX. I like this setup. This is a monthly chart. I'm going to probably be looking to add to the GDX in the coming days. I like the bottoming tails here, second consecutive month, assuming that we hold it. I like it. Good potential double bottom setup on your ultimate oscillator. Good potential double bottom setup on your slow stochastic. So I'm liking it. It's a bit too early to get long of it now, but when I decide to get long of it, I will send out an alert to my members. You need to be a member, 14-day free trial offer. And this is going to be the last stock, SID. This is, I believe, a Chilean miner. I know it's a South American miner. I'm not sure which country it is. But anyway, this is one that we traded a few weeks ago, actually a couple of months ago now. Wow, back in May. Right here for this pop higher. Swing trade right off of these oversold levels. This is what we do. We buy stocks when nobody else wants them. And right here, nobody else wanted it. Short squeeze out. And what we're seeing here is, although you don't have a breakout on price, it was in fact had a little bit of a top and tail at the declining downtrend line, the upper band, you're seeing a breakout on the RSI. You know, the RSI is not about just simply overbought and oversold levels. It's also about what What trends are you seeing? Many times you'll see the indicators begin to break out, much as we did on IWM on this last breakout. The indicators will show the breakout before the price action does. Does that mean that you need to buy it right then and there? No, price is more important than anything. However, it tells you, look very, very carefully at the stock because there's a good probability that you're going to see a breakout. And you're seeing it break out as well on the ultimate oscillator. Volume to the upside, very strong today. Down volume has been declining, up volume has been rising. So I'm liking SID. I like it from a historic perspective as well. So sign up for the 14-day free trial offer. If you have any questions, shoot me an email, robert@thecontrariantrader.com. If you watch this on YouTube, please subscribe to my channel, Stock Twit, subscribe to my Stock Twit tweet thing and my Twitter feed or whatever else I got out there, wherever you're watching this. All right, folks, have a great evening. Again, if you have any questions, I don't want anybody to lose money, shoot me an email. Take care, folks. Bye-bye.